Are we on the verge of the biggest silver rally in history? Some analysts are calling it the silver short squeeze 2.0, and they're talking about a potential price explosion that could send silver soaring past $80 an ounce. This isn't just wishful thinking. There are powerful forces at play right now that could make this a reality. Stay with me, because in this video, we're going to break down exactly what's happening, why the big banks are getting nervous, and what this could mean for your portfolio. This is a story you absolutely need to hear. Let's rewind a bit. Remember the first silver squeeze attempt back in early 2021? A wave of retail investors, inspired by the GameStop saga, tried to take on the massive institutional short positions in the silver market. While it caused a temporary spike, it didn't quite achieve the epic breakout many had hoped for. The market was just too big, the paper manipulation too entrenched. But what if that was just the opening act? What if the underlying conditions have now changed so dramatically that the stage is set for a much, much bigger move? That's what we're looking at today. The fundamentals for silver are stronger now than they have been in decades. We're talking about a perfect storm of industrial demand, investment demand, and a supply chain that's struggling to keep up. First, let's talk about industrial demand. This is the bedrock of silver's value, and it's on fire. The green energy revolution is gobbling up silver like never before. Solar panels are a huge consumer of silver, and with governments worldwide pushing for renewable energy, the demand for solar is skyrocketing. Every single solar panel needs silver. And it's not just solar. Electric vehicles, 5G technology, and countless other electronics all rely on silver for its incredible conductivity and durability. Unlike gold, which is mostly hoarded, a significant portion of the silver mined each year is consumed by industry. It gets used up, and it's often in such small quantities within products that it's not economical to recycle. This creates a constant draining pressure on available supply. This industrial demand isn't going away, it's accelerating. We're building the future with silver, and there's simply not enough of it to go around at these prices. Now, let's layer on top of that the investment demand. For centuries, silver has been seen as real money, a store of value. When people lose faith in currencies due to inflation and government debt, they turn to precious metals. And what are we seeing right now? Record inflation in many countries, massive government spending, and a growing sense of economic uncertainty. People are looking for a safe haven, a way to protect their purchasing power. While gold gets a lot of the attention, silver is often called the poor man's gold. It's more accessible to the average person, and its historical gold to silver ratio suggests it is incredibly undervalued right now. Historically, that ratio has been around 15 to 1. Today, it's hovering around 80 to 1. For silver to return to its historical average, its price would have to increase dramatically, even if gold's price stayed the same. This huge discrepancy is a massive signal to value investors that silver is the opportunity of a lifetime. So we have surging industrial demand and growing investment demand. What about the supply side? This is where things get really interesting. Silver mining is a tough business. It takes years and billions of dollars to bring a new mine online. For the past decade, with silver prices relatively low, there hasn't been much incentive for mining companies to invest in new exploration and development. As a result, the pipeline for new silver production is running dry. We're seeing declining ore grades at existing mines, meaning they have to process more rock to get the same amount of silver, which increases costs. Add in geopolitical instability in major silver-producing countries like Mexico and Peru, and you have a very fragile supply chain. The annual supply of newly mined silver is barely keeping up with industrial demand alone, let alone the added pressure from investors. For years, the market has been in a structural deficit, meaning we are consuming more silver than we are mining. This deficit is being filled by above-ground stockpiles, but those stockpiles are not infinite. They are being drawn down at an alarming rate. This brings us to the COMEX and the paper market. The COMEX is the primary futures and options market for metals like silver. This is where the price is supposedly discovered. However, many critics argue that the price is suppressed through the trading of massive amounts of paper silver. These are contracts that represent silver, but they are not always backed by physical metal on a one-to-one basis. In fact, the amount of paper claims to silver often dwarfs the amount of actual physical silver available for delivery in the vaults. This is the Achilles heel of the big banks and institutional players who are massively short silver. They've made a bet that the price of silver will go down or stay flat. They profit from this paper manipulation. But what happens if a large number of contract holders decide they don't want cash, they want the physical metal? What happens when they stand for delivery? This is the core idea behind the silver short squeeze 2.0. If enough physical demand materializes, from industrial users and investors alike, it could overwhelm the paper market. The COMEX vaults would be drained. The entities that are short would be forced to go into the open market and buy physical silver at any price to cover their positions. They would have to deliver the metal they promised. This would create a frantic buying panic, a feedback loop where rising prices force more shorts to cover, which in turn drives prices even higher. This isn't a fantasy. We've seen similar events in other markets, like the London Metal Exchange's nickel crisis in 2022. When the physical reality confronts the paper promises, the results can be explosive. So what's the trigger for this $80 breakout? It could be a number of things. It could be a sudden geopolitical event that spooks the market. It could be a major industrial player deciding to secure its future supply by buying up huge amounts of physical silver. Or it could be a continuation of the grassroots movement, with millions of small investors around the world deciding to convert their fiat currency into real physical silver. The pressure is building from all sides. The registered inventory in COMEX vaults, which is the silver available for delivery, is at multi-year lows. At the same time, demand for physical coins and bars from mints and dealers around the world remains incredibly strong, with premiums often being very high, indicating a tight physical market. The system is stretched to its breaking point. When you look at the chart for silver, it has been consolidating in a massive base for years. From a technical analysis perspective, the longer the base, the higher the space. When silver finally breaks out of this long-term consolidation pattern, the move could be swift and violent. A move to $30 would be just the beginning. $50 would be the next major hurdle, a price we briefly touched back in 2011. But given the unprecedented fundamentals we're seeing today, the supply deficit, the insatiable industrial demand, and the global loss of faith in currency, a move to $80 or even $100 is not out of the question. Many seasoned analysts believe silver is the most undervalued asset on the planet right now. Its potential for upside is asymmetrical. The risk-reward is heavily skewed in favor of a major price appreciation. This isn't financial advice, and you should always do your own research. But the evidence is compelling. The pieces are all in place for a historic move in the silver market. The combination of shrinking supply, explosive demand from both industry and investors, and a fragile paper market built on leverage creates the perfect setup for a legendary short squeeze. The big banks have been playing a dangerous game for years, and it looks like that game might be coming to an end. The question is not if, but when. Are you prepared for what's coming? The Silver Short Squeeze 2.0 could be the financial event of the decade, and it seems to be knocking on the door right now. Thanks so much for watching. What are your thoughts on the silver market? Do you think we're heading for a major breakout? Let me know in the comments below. And if you found this video valuable, please hit that like button and subscribe to the channel for more deep dives into the markets. Don't forget to ring that notification bell so you don't miss our next update. Until next time, stay informed and stay ahead of the curve.